The Kasikorn Bank has been appointed the mandated lead manager to raise the 21 billion baht for solar power public company. The fund will finance the construction for 34 solar farms with capacity of 6 megawatts each, or a total of 24 megawatts. If all projects are completed in 2013 as expected, solar power will be the world's largest solar power producer. Grisada Lamsam, the first senior executive vice president of the bank, said this is in line with the bank's focus of promoting renewable energy. The bank earlier extended a 3.1 billion baht loan to finance solar power's 3 projects with a combined capacity of 18 megawatts in Nakhon Ratchasima, Sakon Nakhon, and Nakhon Phanom. All 3 have started selling power to the Provincial Electricity Authority. K-Bank aims to be the premier financier for conventional and renewable power generation. As of April 2011, the bank has been the financial advisor and mandated lead arranger for many deals, helping to raise a total of 150 billion baht, which is 91% of the industry's 161 billion baht credits to the power generating industry. Direct financing from the bank totaled 60 billion with 27 billion baht outstanding. And on the line with us right now is Kun Kopsit Silapachai, the head market and economic research capital markets business division of Kasikorn Bank. Welcome to the program, Kun Kopsit. So how will the election affect the economy?
Well, overall, the election is part of the democratic process whereby the people choose politicians whose main goal should be to represent the benefits of the people. If the people respect the results of the general elections without resorting to stirring political or social unrest, this would definitely be a great outcome, and therefore the country could move ahead. However, I think this is a bit of a wishful thinking since we've had the coup back since September 2006. Should the people respect the results of the elections, and then this would be positive that we can expect a normalization of domestic demand, especially the private sector has been lagging behind since we've seen some data tracing back to 2006. One of the data points which we think was somewhat discouraging was the fact that Thailand's net FDI as a percentage of GDP has consistently declined since then, from about over 5% of GDP and now to the level which is about less than 2% of GDP. Hence, therefore, if we don't get that kind of normalization, that would be a very negative factor, dragging the economy in the same situation that we have been witnessing for the past 4 to 5 years.
Okay, what about the post-election economic scenarios?
Well, the post-elections economic scenario, I would probably expect more of the same old that we've been seeing since 2006.
Right.
I think there's a lot of debate that's going on that the reconciliation efforts have not been as forthcoming as it should be, and hence, therefore, the political and social rift and divide would continue. In such a scenario, the domestic demand, especially by the private sector, would continue to be lagging behind. In that scenario, then, the imports of capital goods would be below trend, which means that the gap between investments and savings would continue to be wide, and henceforth that means we're saving more than we're investing. We would continue to have a lot of liquidity in the system, which that is reflected in the current account surplus that we've been seeing for the past 4 to 5 years. So I think that the post-election scenario would continue to be more of the same, and Thailand would be in a predicament where most of our economic drivers would be more external rather than internal.
Okay, so how are the stock market, the baht, and other assets affected by this election?
Okay, if we just consider the domestic or internal factors relating to the elections, the election means a reprieve of political tensions for the time being, up until at least July 3rd or so on. Given that the sentiment will lean towards hope and optimism, I think that the stock market will be likely to be supported for various reasons, whether it's hope, or the other side is, of course, that the stock market is we can't deny the fact that it is a money-making machine for campaigning purposes. So as we've seen in the past, that whenever there's an election that's upcoming, the stock market tends to benefit in light of those circumstances. In terms of the bot, I think that the foreigners will probably be a bit reluctant to come into the stock market for the election purposes only, and hence I think that the bot would be more determined by external factors, risk factors, especially what's unfolding in Greece, what's unfolding with other regions, how are we going to tackle inflation and so forth. So I think that the bot will probably not react solely on the purposes of the elections alone.
Well, this is during the election, right? The bot.
Yeah, well, I think that during the elections, I think that the bot will continue to be in a range, trading in a range manner, because we're going to be in a situation where next month in June, that what we've discussed before is that QE2 is off the table. The markets will be in a milestone, a watershed, or rather, that it has to decide whether or not it wants to take more risk. But what we've been seeing right now is, of course, that whether it's commodities or other risky assets, I think foreigners overall will tend to be on more of the sideline until we get more clarity in terms of monetary policies of the external factors.
Right. Okay, thank you very much, Kun Kopsit, for joining us today.
Thank you.
Thank you. Goodbye. That was Kun Kopsit Silapachai from Kasikorn Bank. Well, right now we will have a short break, but after the break, Around Asia with ANN has the story on India's rising women politicians.